All right, team. Man, I never get sick of being right. Several things to show you today. Man, what's taking place? There's a video I'm going to recommend for you today that you must watch. If you want to know what's going on in real estate, not just in San Diego, but throughout this entire country, there's a tremendous segment. And, I've always been a fan, if you will, of Jim Cramer, Mad Money. I've watched it for many, many years. I don't watch it as much anymore because I don't have traditional TV now. Sorry to share in the post here. But the segment that he did on real estate recently was absolutely tremendous. And I really highly recommend. We're going to kind of walk through it. We're going to stair step through it just a little bit here. And I'm going to show you what's going on with mortgage bonds. And we're going to just kind of take a look at macro. What is going on? And first of all, what I wrote was real estate is changing from a cyclical story to a secular story. Well, what does that mean? What does the word secular mean? Because that sounds like a religious thing. It means you don't have a religion or something. No. In investing, secular means, so in finance, secular is a descriptive word used to refer to market activities that occur over the long term. Secular can also point to specific stocks or sectors unaffected by short-term trends. Secular trends are not seasonal or cyclical. Instead, they remain consistent over time. Now, Jim's segment was called "The Housing Market is Turning into a Secular Growth Story." Not cyclical. We're used to the cycles. And this is why people keep asking, when's the crash coming? We're used to it. It's cycles. People will say 7 years, 10 years, 12 years. There's cycles. It goes up, it comes down, it goes up, it comes down, but trends higher over time. And when you look at what's going on with housing, what's happening is not cyclical. This movement, because by the way, if you're just looking to buy a house in San Diego, you may think it's just happening here. It's happening everywhere, all over the country. Here's a couple of things I wanted to show you. Now, Jim, actually, you know what? If you haven't checked this out, I know I talk a lot about Wall Street. A lot of the information I got about where to look for information on Wall Street was from Jim's first book. So Bernie Madoff went to prison because he ran a fund that I think made 10% a year every year, and it was too consistent, and then it turned out it was a Ponzi scheme. Jim Cramer, as a hedge fund manager, averaged 24% annualized, 24% return on money for his investors as a hedge fund manager. It's beyond legendary. It's Guinness Book of World Records stuff. He got out because he has a conscience, and he felt bad about making rich people richer, and some of those small people you have to step on in order to do that. So he wrote this book, and he started a TV show. This book is called Confessions of a Street Addict. And of course, he means Wall Street. Read this book if you want to know what really goes on Wall Street, how money is made, the way people move, what's possible, how you can influence things. Read this book. Okay. Now he's a good guy on TV trying to explain things to us. My knock on Jim is that he's too Wall Street, but that's also what's great about him. He's a Wall Street guy. So when he wants to talk about housing, he talks to the home builders. That's only one perspective. I don't really see him bringing CEOs of real estate companies on. He should do that. But look at what the quotes that he got. He's a great journalist, by the way. He was a journalist before he became a hedge fund manager. And so he's got great journalism. And look at some of the quotes he got. So Toll Brothers CEO said, over the last decade, 6 million less houses were built. So we're talking about the last decade since the crash, right? 6 million less houses were built than in the previous 4 decades. This is going back to the 70s. It's possible that housing is just beginning to recover given that we have many more people in this country than we're building homes for. Home builders kind of got a little bit gun shy after the crash because they got hurt hard. They got hit hard. But that didn't stop people from making babies and people from growing families and things from happening. So during that time where home builders were a little gun shy and didn't start as many projects and weren't doing as many things, and as more regulations came in to make it harder to build, we still have a growing population. This is the secular story. There's more. He goes on to say, it's going to take a long time for this pent-up demand to be satisfied. We think it's going to take years before we ever get back to anything close to the equilibrium that we had seen in a bunch of the prior decades. So he's talking about years. I've been telling you 3 to 4 years. 3 to 4 years is what we're looking at minimum. If they're right about this being secular, it may never end. Here's what Lennar, executive chairman, said. New home construction cannot ramp quickly enough to fill the void of the production deficit that has persisted over the past decade. While some question whether that deficit is 1 million homes or 5.5 million homes, the bottom line is that supply is short and is likely to remain that way for some time to come. Now, these are just some snippets. I want you to watch this segment. I'm going to give you the link because Jim really breaks it down. I mean, really, really breaks it down. And some people are saying, well, the Fed's going to raise rates in a couple of years, so that'll really put the brakes on things. We've seen rates spike during this cycle, and literally nothing changed. Literally nothing changed. So I don't know if that will have a huge impact or not. People who are buying houses right now, there's a ton of cash out there. There is a ton, I mean a ton of cash. Not just cash buyers, but people buying with big down payments. Also a big deal, what's going on. So the expectation right now for a lot of people is that we're going to see a cycle. We're going to see a cycle take place, and at some point it's got to give, and then we got to go. But if Jim is right about this, if I'm right about this, if what the home builders are telling us is right about this, we have a generational issue, meaning we have a very, very big issue that is going to persist for a long, long time. And the first domino, that's what's so interesting about it, the first domino that flicked was Corona, because COVID pushed people to a point where they really needed to have a house that fit their needs. They couldn't just get by anymore. We were quarantined. And that was the first domino that really started this rolling. I've been showing you all of the, not all, but some of the articles and the information about Wall Street buying houses in a big, big way. And they're going to continue to do that. I'm telling you right now, that's for sure that's continuing to take place. It's happening right now, every single day. So if we really, want to understand what's going on, we have to zoom out and we have to remember that what has happened in the past isn't necessarily going to happen in the future. What has happened in the past was in a different environment. Was in an environment where home builders were building and keeping up with demand, and they kind of took a decade off, almost, recovering from the housing crisis. And during that time, our population continued to grow exponentially. So what we have, and the economy has done great the last 10 years. So we have a bunch of people with a bunch of money and not nearly enough houses, millions and millions and millions of houses short. I don't buy that we're only 1 million homes short. I think it's millions and millions. And so if that's the case, everyone who's expecting the market to cool off or expecting a crash or expecting a better opportunity to buy, do not be surprised if you are wrong. Okay, just don't be surprised if you're wrong. Watch this segment. I will put the link both on Facebook and in YouTube. Okay, so now we understand secular, the potential. Let's get granular here and look at rates. So sometimes I don't like to be right, but we told you this was going to happen. Here's our support level, right? So the easy trade that I was telling you about yesterday, the continuation trade, we had the double top up here, right? The overall trend is lower. And so when we have this breakout, okay, this was a big breakout. The safe thing to do when you see a breakout like this, if you're a trader, is you buy it. Once you have the recovery, you buy it down here, expect to sell it at the previous support level. The previous support level was right here. So what I was telling you yesterday when we were right here, they were probably going to come up and touch this and retreat. And it would be a safe thing to do to put a sell order in right here with a really tight stop, and you would probably make money. And that's exactly what's happening. So we're only down 5 basis points. It's not a big deal. Okay. Rates are pretty much flat. In fact, some areas are scaling better on the rate sheet today. So there. But we still have an uptrend that's holding. And so that's good. And we want to continue to see that. The next couple of days are going to be really crucial. I think this uptrend will take us all the way to this resistance level here, where we have these 3 moving averages. And then we also are going to have, the downtrend is going to meet in there somewhere, depending upon how you draw it or, how they trade it. The downtrend is going to meet in there somewhere. So there's a lot of resistance, about 15 basis points from where we are right now. And we got to keep that at 20, 25, let's call it. So there's a little more room for upside. That's just why I'm telling you, if you're in a purchase situation, lock. If you're in a refi situation, you also may want to lock. But if you have the time, if we can bust through this, we may, skyrocket from there. So that could take a month or two. But if you have the time, you're doing a refinance, you've got an appraisal, you're good for 6 months. You can always get updated documents. Hey, that is something that could work out really, really well for you. So hopefully that's helpful. Watch this link. I never tell you to do this. I never recommend stuff like this. Watch this link. Trust me, it will be worth your time if you want to understand the real story of real estate. Because it's not location anymore. It used to be all about location, location, location. Hey, this place, that way. What you're seeing right now is everything is nuts. It's not just the coast in San Diego, for example. Look at Lakeside. Look at Santee. Look at Alpine. Look at Descanso. Look anywhere. Look in the Midwest. Look in the North where it's cold. Look in the South. Look in the dirty South. Everything is on fire. Why? Because the cycle's changing from a regular, consistent, cyclical nature to a secular long-term growth story. In real estate, it's here. And something I've been talking about for many, many years. And it is here. And it is here to stay. So for anyone who's confused about that, tell them to watch this link. Not the link to my video. Watch the link to Jim's video. Watch that one. He really breaks it down very, very well. I'm not going to attempt to recreate it. I'm just going to pass along the good content. So hopefully that's helpful, guys. If you have questions about the VA home loan benefit, whether you want to buy or refi, give me a call, shoot me an email, NMLS 155010. You can call or text me at that number, email me at that address. I'm always here to help. Have a great day, and I'll be back again soon. Have a good one.